longest budget speech in recent years. The FM himself sat down, which is also unusual to that extent, delivering the second half of the speech while sitting. And what a speech it was. A large number of changes that came through on the tax front, on the infrastructure spending front, as well as on the various customs and excise duty fronts. Cigarettes being, you know, I think the poster boy really of the tax changes that took place today.
Indeed, Menka, doesn't, you know, kudos to the finance minister, you would have to say, if he had 40-45 days to prepare this budget, you know, the kind of feedback that we're getting is that this could be one of the better budgets that the market has seen over the last many years. And I think the kudos to the finance minister, and the markets have given 2 thumbs up from intraday lows.
All right, let's get you the top stories at this point in time. The Modi budget hiking FDI limits in insurance and defense to 49% and enhancing investment in infrastructure by about 10% across the board. That's an additional 50,000 crore rupees towards infrastructure investments in the country. Personal income tax exemption limit has been raised to 2.5 lakh rupees. Investment deduction hiked to 1.5 lakh rupees, and the deduction for housing loan interest payments has been hiked to 2 lakh rupees. We've got more news coming in from that budget. The FM shifting the burden of dividend tax to the recipient and not the company or the mutual fund. That seems to be the headline announcement. We're still looking into the fine print on whether it's just a computation issue. Long-term capital gains tax rate on the sale of mutual fund units has been hiked from 10% to 20%, and the holding period has been increased from 12 months to 36 months. The FM has extended the investment allowance for industry to boost manufacturing. It has also extended the investment allowance to SME capital investments as well. So it's an expansion and an extension of the investment allowance all the way up to the year 2017. But no reversal of retroactive tax changes of the past years. The finance minister on the GST front has expressed hope that GST legislation will be passed in FY15. As far as the DTC goes, he says it is currently under review. No more detail on that. The markets, as Anuj will just tell you in detail, have made a giant recovery as the budget speech was underway and wrapped up. The Sensex jumping 3% from the day's lows to cross 25,800, and the Nifty now about that 7,700 mark. It's been quite a recovery for the markets, hasn't it, Anuj? What, a 800-point recovery for the Sensex from the bottoms?
800 points up from the bottom for the Sensex, Menka. 500 points for the mid-cap index on the bottom of the heap. You know, at one point the mid-cap index was down 2.5%. It's now up 2.5%. So intraday there's been a 5% swing for the mid-cap index. NSE advanced decline ratio was 1:4. It's now approaching 4:1. So that's been
big
the kind
reversal in the
it's
markets.
A complete
nothing
reversal
short
that
of
the
dramatic
market,
that's taken place.
It's nothing short of dramatic, and a lot of people believe that, you know, the kind of gap that the market created, for a post-budget rally, that could be getting filled now. At least that's the sense you get looking at the data.
What are you picking up in terms of positions in the derivatives market, Anuj?
Yeah, so the derivatives market is interesting because, you know, Menka, in the morning we made a point that smart money was betting on the market peaking out at somewhere around 7,800 to 8,000. I think the sense is that the smart money still believes 8,000 is the peak, but you started to see a lot more long positions in the market. What's interesting is today's move is led by high beta. You know, if you see the futures market, IDFC is your stock of the day by miles, and for good reasons. Then you have DLF, India Bulls Real Estate, HDIL. All these stocks are up about 10% or so. Big return of high beta. Now that, you know, begs asking a question that is this going to be just a one-day move, or can tomorrow onwards we have a follow-up in the market and we see the market going back to the previous peak? I think that would be the big question.
All right, we do have Nirmal Jain on with us, so let's get a quick view from him on what he sees happen with these markets here onwards. Nirmal, we're still going through the various announcements and the impact analysis of that. So I suppose it's going to take us another 24 hours to fully understand the impact of this budget. What do you make of how markets have reacted in today and where they could go from here on?
Yeah, you're right, and we'll take 24 hours or even more to analyze the fine print. But more importantly, we'll have to see the execution over next 1 year. But at this point in time, most of the investors are quite optimistic on this government's capability to execute and deliver whatever they have promised. And there are quite a few things in the budget which are in the right direction, which is, you know, there's something for road sector, something for power. Can you hear me?
Yes, I can, Nirmal. Sorry, go ahead.
Yeah. So there's a 10-year tax holiday for power generation and power transmission. There's a manufacturing investment allowance. The road sector increased allocation. There's an increased allocation for housing. For infra, they have made bank lending much easier. They also raised the personal income tax. So there are quite a few small things, or quite a few things that were on the expected lines. Although a couple of big bang things which, some people are hopeful, but maybe 45 days is too short a time. I mean, they have not happened. And particularly, there's no word on reforms on subsidy or reform on labor laws. I think one should expect them in the full budget in February 2015. But besides that, I think there are so many things which are in the positive direction as expected. And I think that is what market is giving thumbs up. But we are in the bull market, and those expectations have not belied. People still, whatever was expected from the market more or less has come through.
Okay, Nirmal, good afternoon. So, what's your sense? Do you get a sense that we will have a post-budget rally? I mean, taking out today's big rally aside, from tomorrow onwards or from maybe next week onwards, for the second half, will we have a big post-budget rally?
I think from tomorrow onward, the rally or the investor interest will get focused on the stocks and sectors that have directly benefited from the budget. My a priori hypothesis is there's, say footwear or in the consumer segment, there are a few small segments, but more importantly, you look at power generation, power transmission and distribution, maybe road sector. So I think the market will start focusing on companies and sectors that are directly benefiting. They'll also analyze the impact on banks and infrastructure companies. So rally will continue, but rally will be more stock specific, bottom up stock picking. I mean, that's what analysts and investors will start doing from tomorrow.
Okay, so Nirmal, give us 3 or 4 names then, because we've seen IDFC, of course, rallying 10%, but in the sectors that you mentioned, 3 or 4 top names that would benefit, since it's going to be stock specific approach.
See, I think because I haven't had time to go through the details in the fine print, so I don't want to hazard a guess there, but I guess as these are all subject to revaluation, but power transmission companies like Crompton or KEC or power generation companies, I mean, these will be the direct beneficiary. Other than that, all the banks should do well, particularly public sector banks also. I think these are the sectors one should look at. But overall, broadly, the direction is right. And so all the manufacturing companies, infra companies, to that extent, capital goods companies, all these companies should benefit. And I think market was expecting that, because if you look at the rally from the elections till the budget, then there has been focus more on these sectors. And also sector like cement will benefit because of a huge thrust on housing as well as infra and manufacturing. I think these are the sectors that one should look forward to. Right. So what will happen is that in last 3 years, if you see, the portfolios were getting overweight in IT, pharma and FMCG, and now the portfolio weight will start shifting towards infrastructure, capital goods, banks and PSUs.
All right, we're going to bring in some more market voices. Nirmal, stay with us. Sunil Singhania, head of equities at Reliance Mutual Fund, joins in. Sunil, will you be putting more money in this market after what you've heard in this budget?
See, I think obviously the budget has basically been taken very well by the market. But I think even before the budget, our outlook on the Indian economy and the Indian markets has been quite positive. We needed some luck. So hopefully the monsoons will revive. Oil is already corrected to 108. And I think this budget is very clear that, we are a big democracy. We needed policies. So this budget was more on the policy front. A lot of regulations which we needed to streamline have been streamlined, and I think all we need now is execution. So I think and we believe that execution should definitely pick up. So I think all the ingredients of a structural bull run are in place now, and this budget has definitely clarified a lot of issues pertaining to a few regulations, and that has been taken very positively.
Sunil, let's get a little bit more specific. What do you like going on from here based on the announcements that you've heard today? Like, would all of infrastructure be a clear buy based on the focus that he's placed on roads, on water, on renewable energy? All of those areas have gotten some attention or the other.
Yeah, even pipelines, oil pipelines, he's talked about 47,000 kilometers, that's a big thing. I think one thing he was very honest to begin with, that, it's a very new government and he did not have too much to do here in the last 1.5 months. And I think the other thing is that despite accepting the challenge of maintaining fiscal deficit targets and despite the stiff, you can say, projections for revenue, he's like a man, really taking it up. The other thing is, without doing too much, at least there has been a lot of effort made to rationalize a lot of stuff which were creating unnecessarily disputes. So whether it was rationalizing duties or even retrospective taxes, a lot of other small amendments which can streamline and reduce the disputes between the companies and the income tax department or the indirect tax departments. I think all that has really been positive from our perspective.
I'm not sure that's so clear, Sunil, but I won't dispute you on that front. I think since we're in the last 1.5 hours of markets, on this fairly momentous day, maybe some ideas that you will be pursuing here onwards based on the impetus that the budget has given them, some sectors or ideas that you think you will now look at with fresh eyes?
I think from our perspective, this budget is more a macro level budget, and I think the fact that very clearly the finance minister has laid down the roadmap for fiscal deficit, for reduction of subsidies, for development of the country, I think from a long-term investor's perspective, I think India becomes a great country to invest. Stock-specific or sector-specific, it's going to be the usual. Obviously, IT and pharma are more export-oriented sectors, and if you're looking at the domestic economy growing, then all sectors connected with the domestic economy should definitely grow. I think the impetus to infrastructure funding by removing them from the CLR and SLR requirements also will infuse much needed funds for development of these sectors. From our perspective, we are also looking at announcements post-budget. So, there have a lot of committees being formed. I think how they pursue on that part, whether it is creating some kind of a structure to attract funding infrastructure or railways, I think those would be sort of added, you can say, steps which we would be watching in very eagerly over the next few weeks. But overall, very clearly, the economy is being given a push, whether it's housing or infrastructure, and I think all sectors connected to that should definitely benefit.
All right, Sunil, we'll come to you in a bit again. Sanjay Dutt also joins in from Quantum Securities. Sanjay, hi, good afternoon. I believe a party has already started in your office, and you've already given this budget 9 or 10 stars out of 10. I mean, how much more for this market? Do you think we would now have a big post-budget rally?
I think I'm glad that you mentioned, because the first time I'm hearing anyone talking about 8 or 9 on 10, because otherwise the first reactions everyone wanted was that how do you rate the budget on a scale of 10? So glad you asked that question. I think I would rate 9 on 10, barring the 1 point going away because of the retro issue being still up in the air, and I think some ambiguity or some clarity still needed on the dividend taxation. But on balance, I think it's a real good document, given the fact the government has been on the hot seat for 50 days. You couldn't have expected anything better. And what I heard Sunil saying is that execution is an important thing. That's what one needs to look forward to. And I think the earlier signs are there, because in a lot of places, what I heard the finance minister in my early analysis right now is that he mentioned a lot of timelines and dates by which he expects committees and a lot of other actions to be taken. And if those committees and timeline dates are to be adhered to, I think we are on the right track. We are going to be one of the best investment destinations in the world, because we haven't had capital inflows for the last 5 years. We haven't had performance. We've been really dropped off the investment map across the world. So in that backdrop, there are more upsides to the market. Okay. There is more bottom-up opportunity.
Sure. So Sanjay, since it's bottom-up, give our viewers some names, either sectors or if you can be generous, maybe even individual stocks.
I think I would stick to sectors. I've been optimistic on banks for the last 6 months. I've become more optimistic today, given this benefit of the infrastructure bonds and banks focusing on infra lending. The MSME focus that the finance minister talked about, the agri focus. In fact, that's one big story which I think most commentators have ignored. If you read across the budget, you'll find so many measures for the farm economy, and that's where a good amount of purchasing power lies in our country, which obviously benefits the mainstream companies also. So I think all companies related to in and around the agri input space, they will definitely benefit. The venture capital impetus given by the 10,000 crore fund is very positive for the smaller companies who are wanting to set up. E-commerce will be a big beneficiary of all these things because there are a lot of service companies who work with e-commerce companies who would benefit from all these measures. And I think the MSME and the job creation focus that he talked about will obviously benefit the banks further because banks have a problem mostly with the SME advances also besides the large advances to large corporates. So on balance, I think banks, infra, they continue to be the good bets. In addition to that, I think next 2 years are going to be very good for telecom also.
Okay, Sanjay, one sector which you have liked in the past and is doing really great guns today, real estate. How would you approach some of these names like DLF, Unitech, or maybe even Indiabulls Real Estate?
I think very selective there. I wouldn't take a sector call, even given the fact that we've had REITs and those kind of announcements. I would be extremely selective there because most of the companies, who had excess inventory are still dealing with that. We still haven't got pricing power for most of the real estate companies. So I would be extremely selective. For instance, I would like a Indiabulls Real Estate, but I would not like a Unitech. So, one would have to be selective there. On balance, if you want me to say go and buy a real estate fund, a mutual fund who's got a real estate scheme, no, I don't think so. Go and buy specific real estate stocks which will benefit? Yes, I definitely agree.
All right, gentlemen, we're going to thank you for your quick views on the budget and what it means for the markets. Nirmal, Sunil and Sanjay, thanks very much for joining us. And apologies for keeping it short, but that long budget speech has thrown all of us off schedule to that extent. We now get to what corporate India makes of this budget. Joining us now is Godrej, the chairman of Godrej Group. And we'll also have comments coming in from Koushik Chatterjee, the group CFO of Tata Steel. Mr. Godrej, let me first come to you for a very quick, brief overview of what you think this budget does and how you would rate it.
I think it's an excellent both budget speech and budget proposals. I think it addresses investment concerns and growth concerns very well. I think obviously it has to be followed up with some of the actions proposed by the finance minister hereafter. I think some of the investment allowance proposals will be very useful to increase the investment and therefore the industrial growth rate in the country. But one point will have to be kept in mind before the budget proposals are passed, that some of these proposals will not work very well unless the MAT rate is reduced. Because if the minimum alternate tax was to hit, then investment allowance would be of little use. So I think it would be very useful before the budget is passed if the MAT rate is reduced to around 12% instead of the present 22%. But overall, I think it will be great for investment, great for the stock market, and great for GDP growth in the near future.
Sir, some back-of-the-envelope calculations seem to indicate that the increased government spending on infrastructure amounts to somewhere between 45,000 to 50,000 crores versus last year. That, along with the investment allowance, which is really an extension of the 2013 budget scheme and an expansion of it now to SME investments, of about 25 crores and above. Is that enough to kickstart the investment cycle? That's my question to you, because that was supposed to be the core of what this budget does, and I'm not sure whether you think that it is achieved so.
No, I think it will kickstart the investment cycle. I think overall the better perception and the confidence in the Indian economy will also help. But as I mentioned, this investment allowance must kick into the company. So if, for example, a company invests, gets an investment allowance but can't enjoy it because a minimum alternate tax would kick in, it wouldn't be good. So I think that will have to be reviewed.
Okay. We are also looking at some of the budget math. It does seem that he will keep to the 4.1% fiscal deficit target, something that he laid out right up front, saying that the previous administration has left that as a challenge to me, and I take up that gauntlet. I suppose you're also relieved to some extent that fiscal prudence has not been given a go-by, in the budget announcements today, even while he has put in some extra money in infrastructure.
Yeah, I think that's very important. I think the fiscal deficit targets will certainly be met. I feel that the 3% fiscal deficit target he has mentioned for 16-17 is also very useful, that we are on track to improve our fiscal prudence. But most importantly, I think the finance minister has recourse to further disinvestments if required to ensure that the fiscal deficit targets are met. So I think I don't think that will be difficult. I think people will be very confident that this finance minister will meet the fiscal deficit projections.
Mr. Godrej, you have within your group an important property company as well. What do you make of the announcements on the tax pass-through treatment for REITs and possibly for infrastructure trusts as well?
I think those are good announcements. Some of the announcements for affordable housing are also good. So I generally feel that some of these announcements will be useful for the real estate sector. But the most important thing for the real estate sector in India will be GDP growth. If the growth is good, the real estate sector does well. If the growth is not, it doesn't. And so I expect that since growth is likely to be much better in the next year or two, I think the real estate sector will do much better.
Mr. Godrej, stay with us. I also want to get in some views from Koushik Chatterjee. Koushik, good afternoon. Do you think this budget gives you enough confidence now, based on its various tax treatments, based on what it's done to the investment allowance, based on the fact that it's put some skin in the game with its own enhanced infrastructure investments, for companies like yours to consider further capital expansions in the country?
Yeah, hi Menika. I think if I were to look at this budget speech in particular, there was a sense of purpose, there was a direction and a roadmap for the next few years. It didn't go overboard. It realized the importance of remaining within the fiscal prudent limits and aspires to be at 4.1 and eventually at 3. So that's very ambitious in the context of where the underlying economy is at this point of time. And then it shifted to the investment focus, where the government has taken up on its own the onus of making significant investments. If I'm not mistaken, I heard that he's also asked the PSUs to make significant investments. So both these will trigger a start of an investment cycle which had come to a standstill for the last couple of years. And if that happens, he's also facilitated the ease of doing business, looking at rationalization of the regulatory and tax regimes. So it's been an onus on investment, and yet it's been a facilitator for others, namely private capital, to put in money and grow. And if I look back upon the last 1.5 months or 2 months, there has been news and feedback from the government of meaning to make the ease of business more than what it was earlier, and doing away with things which are
Mr. Chatterjee, forgive me for interrupting you, but I think the one question I did also want to ask you very quickly before we start running out of time, I missed some of the variety of customs and excise duty and tax changes that he announced on a variety of goods and services. I was just curious, was there anything that impacted Tata Steel in any fashion on that front, the indirect tax change front?
So 2 points there. The first one was I heard him mention that he is going to resolve, or the government is going to resolve, the iron ore mining issues and make suitable changes to MMDR. That may not be a revenue issue, but it is certainly a facilitation issue. And the second one was where he rationalized the imported coal duties, which has been brought down from 5% to 2.5%. And India imports significant amount of coal, so I'm sure that will aid all companies who import coal, not only metallurgical coal, but also steam coal and other coal.
Any back of the envelope calculation on what it might do to your bottom line in any fashion, sir? Or too early?
No, too early.
Would it be a material impact, or would it be a material impact?
No, it may not be material, but 2.5% on, if I look at the price of coal today at about, say, $120 FOB, so you have to do your calculation. So it's not material, but it is a good direction to be in.
All right. Koushik, were you disappointed by the point that Mr. Godrej raised, which had to do with MAT? I think that was one on top of everybody's tax expectation list, and unfortunately, I don't think that's been dealt with at all, though we're still going through the fine print to figure that out. But nothing on that front, nothing on the SEC front. Did this budget go far enough, or as further as it could, to boost the investment cycle on your, according to you?
I think it would certainly make a positive impact on the investment cycle, because with so much of government spending on infrastructure, roads, ports and so on, and the PSUs being asked to invest, so there would be and the banking sector being facilitating to invest more in infrastructure. I think the mood has changed and will continue to change. One budget doesn't swing GDP growth by a couple of percentages. We have to keep working on it, and execution of all these intents will become the key.
All right, Mr. Godrej, how would you rate this budget on a scale of 1 to 10?
8.
8? Wow. Is that the highest rating that you've given a budget in the last 5 years, sir?
Yes, I would think so.
Oh, excellent. Thank you very much, sir, for your time.